Hi everyone, welcome to the Forex Form Guide. Tonight we're going to have a look at Gann's sections of the market. In my opinion, a very, very important and key part of analysis, particularly if you're a currency or an index trader. There's a pretty cool potential long, short, long on the Australian dollar, US dollar that I want to take you through. I've got a tight price forecast for you on the British pound and a similar setup on the euro. And finally, a near perfect textbook trade on the US dollar yen, which for the past few weeks has been unfolding near perfectly according to my forecast. All of that and more in tonight's episode of the Forex Form Guide. It'll just be a quick look at Gann's sections of the markets tonight. If you want a little bit of a more in-depth discussion, I'll point you to my Gann's Gold series and part 3 form reading. Sections of the market is just one part of Gann's form reading lesson. If you're new to the channel, welcome. Fantastic to have you here. There's some videos at the top of the page that you might like to watch. And if you do find value in this or any of my videos, I'd really appreciate it if you could click on the like button, leave a comment, and subscribe to the channel. As always, a quick disclaimer, this video is for educational and informational purposes only. Bottom line there, do your own research. This is not financial advice, and always trade responsibly. So we'll start with the Australian dollar, US dollar. Now, Gann's sections of the market lesson in a nutshell for you is this. Markets tend to move in 3 or 4 sections, but shorter term pullbacks can play out in 2 sections. So how do we know whether it's going to be 2, 3, or 4 sections? The short answer is we don't until we get close to the completion of each section. So we have to keep an eye on multiple swing chart timeframes to see how it unfolds. But once you have 3 sections, Gann says look for a definite indication of a change in trend. And potentially, if we get 3 sections in the way I think on the Australian dollar, we'll have a pretty clear indication of a change in trend. But if there isn't a clear indication of a change in trend, watch for a 4th section. Once you get that 4th clear section, there's a very high probability that a change in trend is coming. And of course, if you're dealing with a pullback, which I believe we are looking at on the British pound, then in many cases that pullback will unfold in 2 sections. But we'll come to that in a moment. We're starting with the Australian dollar, US dollar. And again, if you're new to the channel, check out page 46 of Gann's book, The Wall Street Stock Selector. But whereas Gann had a yearly, monthly, weekly, and daily chart, I like to run a monthly, weekly, daily, and then a 4-hour chart. And I like to have them like this. And I like to have monthly at the top, then weekly side by side, and then daily, and then 4-hour there. Having the 4 charts side by side, monthly and then weekly, daily, and 4-hour, the charts tend to get a little bit thin, a little bit too tall, a little bit too narrow. So I like to have them laid out this way. As you can see on the monthly chart, we've hit that trend line again, struggling to break above there, although I believe we will, and possibly before the end of the year, but we'll see. The key area that I want to direct you to, though, is down here. I'm seeing a lot of pressure up around this 66.07 area, which would be a 62.5% retracement of this run down here. So I believe this week, if we see a little bit of a pullback, there may be a long opportunity up into that level, followed by a short opportunity out of that level, followed by a potential triple bottom down here around the 64.15 level. Now, that's a pretty specific forecast, but that's all it is, a forecast. In last week's episode of the Forex Form Guide, we looked at forecasting versus form reading. And as I said, sections of the market is one technique in form reading. And it involves lots of things like measuring the time and the price ranges, looking at sections, looking at the signals that the market gives you, among other things. And at the end of the day, you're going to trade based off your form reading, not off your forecast. So I want to show you how this came together. I won't go into a forecast for 66.07. I'll leave that for you to do some work on with your ranges and see why I might think that. I have 3 tight milestones all coming together around there. By the way, type that level into the comment box if you do find 3 strong reasons for that level. Don't type those reasons in though. Leave that for other people to do the work on themselves. But if we do run up to this level, and I think early November, it won't take too long to get there. Early November is an area that I'm watching on this market. If we do get to that level, here's how we look on the bigger picture. Firstly, coming down from our September top, we had a rundown of 186 points, a pullback, and then a rundown of 188 points there. So 2 sections of equal size, almost exactly equal size. And we're now in a little bit of a pullback running up there. Now, again, if we run up to around that 66.07 level, and then we run down those 188 points roughly, again, that's going to bring us very, very close to a 37.5% retracement level there, and potential triple bottoms. Now, big picture triple bottoms like this are rare. And look, we may poke through there and keep going. So I'm not saying it must stop there. But if we run up to the 66.09 first, then we're in position for a 3rd equal range down, or roughly equal range down, that will bring us to these levels here. That was 64.18. That was 64.15. This is the 37.5% retracement at 64.09. One of these levels would be fine. We will know if this all pans out, and look, maybe we tank on Monday and this whole scenario doesn't work, but if these levels pan out, we will know as this unfolds how the smaller ranges or wheels within wheels are lining up. And if we're going to stop down here, we'll see evidence of it coming out of this move here. So you pay attention to your ranges work there. But again, if that happens, I'll be watching very closely. I always like to see the market false break. If you've got old double bottoms that are about to become triple bottoms, I like to see the market false break there and then close above there, which will tell us that any sell orders below there, they might be stop loss orders if someone has placed a stop below there, or they might be new orders to sell as those lows are broken. But if we go below there, false break, and close above there, that tells me that all those orders have been triggered. It couldn't push the market down. That's called a false break, and there's an excellent chance that we're going up from there. So first things first, I think that we've got more upside here, and that's backed up from what I'm seeing on the pound and the euro as well. And then from there, being only 2 sections down, I would expect to see a third leg down, and that's the target area. And from there, that will be a potential triple bottom trade there. Now, normally I only look one price cluster ahead, and that may well be 66.09, and we may go from there and have a really strong run down and burst through those lows there. So I'm not thinking too far ahead, but sometimes you can see a price cluster and then you make the logical step of adding that extra section in, and then you see that it lines up down there, and then you can be on the lookout for triple bottoms there, because triple bottoms are an excellent trading opportunity. You don't get them all that often, particularly several months apart like this. So when you do see them, they are worth watching. Now, of course, we have just looked at this on the one time frame. This is the daily chart. I'd encourage you to work always on wheels within wheels. So treat your swing charts as separate wheels and have a series of them. Some people like monthly, weekly, daily. Some people like weekly, daily, 4 hour. Some people just like a 4 hour, 1 hour, 15-minute chart, for example, but have at least 3 side by side that you're looking at. If you're not familiar with that concept, check out again the Gann's Gold series, part 2, Wheels Within Wheels, or you can check out where I learned it from, which was Safety in the Market and their active trader program there. A lot of people think, oh, that's too basic, I don't need to work on this stuff. But trust me, it's this basic stuff that makes you your profit. If you don't have the basics under control, you could have Gann's time cycles and still not be able to make money from them. It's not a coincidence that in most of Gann's books and courses, he teaches form reading concepts because they are important. They're like a trader's American Express card. You can't really trade without them. Let's move on to the British pound now. And I've been talking about this price cluster around 127.30 for several weeks now, bit over a month actually, and I still really like that level. Looking at the weekly chart though, this is all one weekly swing down here. It has actually stopped around the halfway point down to our 62.5% level. But at some point, this needs a bit of a pullback. And we had a little bit of a weak inside week last week where we couldn't break the high, couldn't break the low. It wouldn't surprise me if the pound goes up this week, a little bit like I'm expecting on the Australian dollar there. And if we get a lower top there, we can look to see if this lines up again with our 127.30 target. Now, this would be a pullback from our January low up to the top there, and then a pullback into a higher bottom on your bigger picture chart. So in that case, we may just see a 2-section pullback. So there's your first run down, pullback, and then a second section running down there. And maybe we don't get to 62, maybe we only get to 50% there. But the prices are lining up around that 62.5% milestone. So that's definitely one that I'll be watching on the pound. So potentially 3 sections that we're watching on the Australian dollar on the daily chart. Here on the monthly chart, I guess you could say, I'm looking at 2 sections for a bit of a pullback there. I'm expecting something similar on the Euro US dollar. And again, this hasn't changed much from the last few weeks, so I won't dwell on it too long. But basically, like the pound, we've had a good run down. We've cleaned out lows, but we still need that lower top to form on the weekly chart. If and when that lower top forms, and probably this week is more likely than not, but if and when that lower top forms, we can look at this range, project it down, and see if we can hit a major milestone there and start building a price cluster around it. Again, pretty quiet week on the euro. Not much has changed there. So I'm not looking to trade this market this week. I'll be focusing on the Australian dollar this week and coming back to this one at the end of next week to see where we're at. That just leaves the US dollar Japanese yen for us to have a look at. And this is one where the forecast has really just come together perfectly. All the milestones are hitting. So firstly, on the big picture, we've already had triple bottoms on the monthly chart on the US dollar yen. See how the bottoms have come in, but the tops are getting lower and lower. We're about to approach this trend line again. If we bounce off that around that 154 level and turn down, that's another lower top. Gann actually says if you get consecutive lower tops like that, it's actually a stronger trade than if you had triple tops all at the same level, because the market wasn't strong enough to get to triple tops. So if we do turn around on that 154 level and start heading down, that could be a really good short trade. Now, coming up from our April low here on the US dollar yen, we have had one and then two sections up. We're now in potentially a third section up here. We had 876 and 880. If we look for 880 again running up, that gives us a target around 154, which would be hitting this 12.5% milestone on the range's resistance card, and also hitting that trend line there. Now, that's not enough to be interested in taking a trade, but check out the range down here. As we have run up, if we're expecting that, I should say 880 point move up, not $8.80 as I said earlier, but if we're expecting 880 points up, we can put a range's resistance card over that move before it happens. And if you go back several weeks, we did this on the US dollar yen, but we can look at that range running up, and you can already see the market is reacting to those 1/8 milestones. And I put those milestones on before this market action happened, and you're already seeing it. We ran up bang on the 50% point there. Gann says tops and bottoms become halfway points in the market. So from that low up to here, that range there, that's the halfway point on the way to 154.31 up here, which is that 880 move there. So straight away, that tells you this is a good set of milestones to have on your chart. Pulled back to the 1/8 level there, ran up to the 7/8 level, pull back to sit nicely on that 50% there, pierce through just a little bit there. And that's actually where we ended last week, looking at the market sitting there. And I said, that looks strong. I expect this market to run up from here into that 154 area. And we spent all last week running up on the US dollar yen. So some nice trades there. Now, this is all one daily upswing. I don't think we're going to double top there. I think at some point, probably this week, we'll have a day or two down at least, have a little bit of a pullback, and then one last run up into around that 154 area. And that would then give us, from this triple bottom here, you've got a run up there, but you've got three nice clean sections, and you can actually see them as well on your weekly chart. There would be section 1, pullback, there would be section 2 up to here, pullback, and then there would be section 3 running up to about 154, which would be a 75% retracement of this run down over here, which was the first lower top there. So as you can see, the reason for tonight's episode being subtitled WD Gann's Sections of the Market is because we've got a lot of different examples of sections of the market. The pound and the euro are similar, showing us a 2-section pullback, but the Aussie dollar, 3 clear sections are potentially on the cards there, depending on what happens this week and whether we do run up to that 66.09 area. But also on a slightly larger time scale on the US dollar yen, we are in a third section here. So we're going to see a couple of examples of a market coming to the end of a third section, so we can start looking for signs of a change in trend. For the Australian dollar, if we get 3 sections into a nice clean triple bottom, to me, that's enough to say that's probably the end of the down move there, and those triple bottoms could be a really strong buying opportunity on the Aussie dollar. On the US dollar yen, on the flip side, 3 sections up there, depending again on where we pull back there. But if we can get one more milestone just to top it off and tighten up that cluster even further at 154, then again, we could have a really nice short trade there on the cards for the US dollar Japanese yen. Again, if you're unfamiliar with Gann's sections of the market, you can check them out in section 2 of Gann's book, How to Make Profits in Commodities, or as I mentioned earlier, in Safety in the Markets Active Trader Program. So that's all for this week. Again, if you did find some value, I'd really appreciate a like and a comment. And if you're feeling extra generous, you can reply to other people's comments, click like on comments that you agree with. If there's a bit of activity on a post, YouTube takes that as a positive and sends it out to more people. And these videos talking about the works of WD Gann and highlighting some of the key lessons there, just my way of leaving a little bit of a tribute behind for WD Gann, who I have a lot of respect for. That's all for this week. I hope you enjoyed it. I'll see you next week, 7 p.m. Sydney time, for the next episode of the Forex Form Guide. So until then, I wish you all the best with your trading, and bye for now.